Yeah, I'm just gonna roll it for a second now. Hey!
Oh my
goodness. What's going on?
Yeah, I was like right down there and I started driving in.
I'm Brent.
Nice to meet you, Grant.
How are you?
Brent. Awesome. Nice to meet you. Alex, how are you, man?
Dude, I'm doing great.
Long time no see.
This is it.
This is great. What a nice
we
setup.
told you this is the
Come on
real
in.
deal.
This is the real deal.
We're going to just do an audio test real quick, and then we'll be able to start rolling.
So you're gonna sit there, but we also got you. We got water bottles. What else you got, Brent?
Yeah, just watch that. Do you want a drink?
Actually, I have one somewhere.
Here
we go. We'll do it together here. 1, 2, 3.
Hey.
Yeah,
okay.
welcome out. Welcome out to the Founders Podcast.
The Founders.
Thanks for having me. I'm excited to be here.
Yeah. And so, can you introduce yourself?
Yes, my name's Erica Neal. I'm co-owner of Infinity Investment Strategies and real estate investor and business owner.
There you go. Alex Palma, owner and founder of YOLO Nerd, automation engineer, totally kick-ass, awesome engine. Go for
There we go. Hey, Brent Tinsley, headshot professional. We do corporate branding, make people look better online because we need it more than ever.
Yeah.
Yeah.
No kidding.
And hey, will you put that mic just a little closer
Yep.
to you? Yeah, just a little bit. Yeah, we look
There.
comfortable.
Yeah,
Nice.
good. Relax. Okay, me too.
Relax.
Me too. Okay.
Shots all look clean. Cool.
All right, let's go.
Yeah, take it off, man.
Let's take it off. So Erica, I met her through what would you say, a monthly conference?
Yeah, it
Or
was like a monthly
deal?
meetup for
Like it's a
real
meetup,
estate
right?
investing. Yeah.
I think it was like the Meetup app, right? Mm-hmm. And so we just got to talking. I ended up connecting with her and one of her staff members. What's his name? David.
Yeah, that's my co-owner.
That's your co-owner. There was another guy. He's your whiz kid. What's his name?
Brian.
Brian.
Yes.
Brian.
Good old Brian. I love him. Yes.
And so you are the founder of Infinity Investment Strategies, and you do the Infinite Banking Strategy. Is that what it is?
That's right.
Okay. And for those who don't know what Infinite Banking Strategy is, you're going to break it down for us.
Oh, yeah.
You're going to dumb it down for us. So what is Infinite Banking Strategy?
Yeah. So infinite banking is predicated on the idea of becoming your own bank on yourself, be your own bank, right? So the common theme here is you are becoming the bank. The idea is instead of giving all your cash and liquidity to a bank, because what are they going to do? They're going to pay you very little on your deposit, and they're going to turn around and lend your money out to others, making a lot more, and they get to keep that spread, right? So they're creating arbitrage with your money, paying you very little, lending it out for a lot. You can become your own bank, create your own private bank. We're using specially designed cash value life policies, very strategic in the way we do that. We're focused on the cash, not the death benefit. But the reason we're using these is there's a whole IRS tax code dedicated to them as far as the tax treatment, asset protection. So there's a lot of benefits. The point is we're using these specially designed policies to hold your cash where you can become the bank. What I mean by that is your cash is earning guaranteed interest plus dividends consistently. But even when you have your money in there, you can borrow against it. So you pay a little bit of interest on that and lend it out to go invest in real estate or fund a business or buy a car, or fund your kids' college, whatever. You get to do what you want with it.
Yeah.
Here's the reason that real estate investors and business owners really like it though. If you have, let's say, 100,000 in there and you want to take out 70 to go into a deal, you take that 70, you go invest it, you go make your money like you're going to do. While that 70's out there earning and getting a rate of return for you, you're still earning compound interest and dividends on the full 100. So, like
Okay.
Robert Kiyosaki says, you're given $1, multiple jobs, and you're keeping the interest rate spread instead of giving it to the banks. So you're recreating the banking system to your benefit instead of theirs while still being able to use your money.
That's awesome.
So it's just your own private bank account where you get to use the money however you want and continue to earn interest no matter what.
wow.
In one sentence.
So when I think about a bank, I'm like, oh my gosh, do I have to have a whole lot of money to do something like this? I'm like, does it take a lot of money to do something like this? I must
No,
have like hundreds of thousands of dollars in my bank account to make this happen. How do you start something like this?
No, that's
How
a
does
good
it work?
question. And you actually nailed it right on the head. Think about like a bank, right? When we first open a bank account, we don't have to open a bank account with a big lump sum of money.
Yeah.
Most people start off, 15, 16, their first job, they get a little bit of money and they just start putting it into it on a regular basis. And then as their income grows, as their cash flow goes, they do more and more and more over time. And then they start deploying it into other, assets, investments, things like that.
Wow.
These policies are the exact same. You can start at a level that you're comfortable with based on your current situation. And then as your business grows, as cash flow grows, we design them in a way, not all people do, but the way we design them, they're set up so that you can fund more and more and more over time, just
Wow.
like your normal bank account.
Okay.
Yeah.
Okay.
Good question.
Oh.
So like, how's that different from just an equity line? I mean, I understand you're being able to, instead of that spread, but like, so the average person, they want to come in, they're accumulating over time or not, they got an investment strategy, but you've got extra tax benefits and you're also not having to, you get extra things with like basically capital gains or things you're deferring those, or you're not having to pay them as much.
Yeah. So a lot of people ask about like the HELOC, right? Like I can get a line of credit on my business or my home, and that's great. I highly recommend those as well. The difference between these policies and taking a loan against your policy and like a HELOC, for example, two things. One, the value of our home, for example, if you take a HELOC, home equity line of credit, there's nothing that says that real estate prices can't and won't go down, right? We've seen it happen once. We can see it happen again. So that value can fluctuate. The other thing is when you take a HELOC, you are stuck to whatever payments the bank is putting on you, right? The bank is the boss. And so you're stuck on whatever their payment schedules are. When you have become your own bank and you're using your private bank, taking that loan out means that you get to pay it back how, when, and if you want. So we've seen it like right now, commercial real estate is not doing too great, right? It kind of sucks. There's a lot of people who are not in a position like their deals aren't cash flowing, or, maybe my business is struggling and I don't want to pay back my policy loan.
You're right.
I don't have to. I'm the bank. I make the rules. So I don't have to pay that back until it makes sense and I'm ready. So you have a lot more freedom and flexibility as far as the payment schedules. And because we're using guaranteed growth policies, there's no risk of it ever going down in value. It's going up every year, regardless of the market. So your HELOCs are great. Lines of credit are great. It's not an either or, it's a yes and. Those are just some defined differences on why would somebody, what are the benefits to the policy? You have a lot more control.
So like, who's an ideal client for you guys? Like you probably work with lots of different people. I mean, you're saying, yeah, everybody can do this, but like, who's really someone that's really going to benefit from this, or is just like a home run easy? Like, hey, look, we got to talk.
Yeah, I would say there's two different avenues we go. One is the entrepreneur who's like, man, I've got money sitting on the sidelines, or I have to have cash, or I'm funneling a lot of money into deals and I want to get dual rates of return, right? Like imagine being able to put money into an account that you can go invest while you're continuing to earn. So people who are doing investments, buying businesses, things like that, that's a really great place for them to store their cash.
Yeah.
It's going to be more efficient than a bank. Now here's the thing, the money in your policy, it's not going to outperform your real estate. It's not going to outperform your business. I tell people this is infinite banking. It's not infinite investing. But if you can get that rate of return in your investment and get it inside your policy at the same time, why not? So on the entrepreneurs, people who are funneling deals or have to keep money on the side, because some banks and some people who are doing like signing on loans, they have to have certain liquidity in the bank. They need cash sitting on the sideline. You can put it in this policy and let it earn guaranteed instead of losing money due to inflation in the bank. So that's entrepreneurs. This is a great fit for them. On the other side of that, there are a lot of people that don't want to lock their money up in retirement accounts or IRAs, things like that, because, really, I just think about all of us, for example. Yeah. Man, I will lock my money up until I'm 59 and a half.
No.
And you have to pay taxes. And that's honestly what before I was doing the real estate stuff, that's what got me into this. I'm like, I was 20 something. I'm like, I don't want to lock my money up for 40 years. Like, that's dumb. What if I need it? And so these policies are a great way to save money in a way that you have quick and easy access to it. I'm using it my daughter is a junior in high school. She's going to be a senior next year, then going to college. So we're planning on using the money to fund her college and probably buy her a car. So it's a great way for me to save money for my personal side, have quick and easy access to it, not have it stuck in a bank where I'm not earning anything, but not locked up in the long term. So simply put, there's three functions of our money. We have short term, intermediate term, and long term. Mm-hmm. Most people don't think short term, long term. Short term is I have safety and liquidity, but no growth. The long term is I have growth, but no safety because it's risky, and there's no liquidity. It's not accessible. So that's the teeter-totter that we're dealing with. This policy helps fill in the middle ground, and it's that saying it's, not better than, but it's just different. It gives you safety, liquidity, the tax benefits, privacy, easy access, but it's going to grow no matter what, and it's not something that you're stuck waiting 30 years to get to. So those are the two different people that we can really serve. If you got cash and you're a good saver, this is a great way to have intermediate term cash.
When I was researching, infinite banking strategy, and the way you're communicating to me a little bit about this, and you're talking about your daughter, are you talking about more like generational wealth, like in a way?
Absolutely. Oh yeah,
So there's ways to also avoid inheritance taxes, sort of, and trust. I mean, or your
So that's actually a really good point.
Yeah.
These policies there's no tax. This is the most efficient way to transfer wealth. No inheritance tax, no estate tax, no wills, no probate, and that's huge because probate is usually where everything goes wrong. Because
massively wrong, and ties up in forever in court. And during COVID, it was insane.
Yeah,
years and years and years of waiting around. I mean,
and probate is just taking your financial portfolio and stripping it butt naked in front of the world, right? Like everyone sees everything. It's public knowledge, and that's when you've got cousins and great aunts and everybody else crawling from the woodworks coming to get their piece of the pie. So these policies bypass all of that. There's a great book called "What Would the Rockefellers Do?"
Yeah,
I think you and I talked about that.
Yeah, we talked about that one.
It's such a good book. It talks about how they've been able to maintain generational wealth, both from being tax efficient, like these policies. They also do a good job talking about how do you teach your kids. There's another book I read called Family Wealth, and it said that most people think that estate planning is preparing wealth for your family, and it's not. It's about preparing your family for wealth, and that's what it should be. You're having the conversation with your kids and your grandkids. So we don't want to create trust fund brats. We don't want to, and I'm going to get real passionate about this because it really grinds my gears. I don't know where we went as a society that we've gotten to this point where when I die, you're like, man, like people say like, fuck them kids, right? Like I don't want to leave my kids worse off than when I found them. My goal is I want to leave the next generation better. I've worked my butt off to get where I am. And now guess what? My kids are going to start at a level higher than I did and take the family to the next level and then the next level and then the next level. Like, yes, I want them to work. I want them to have that grit, and they're going to have all of the, they talk about fire and kindling. You can't start a fire unless you put in the work with the kindling. I'm going to give them the kindling, but they have to have the resources and the knowledge on how to start the fire. Yeah. So it takes both. And so just generational wealth is incredibly powerful when it's done correctly. And that's a big part of the infinite banking process is all the money that's in here and your death benefit passes completely tax-free. Wow. And you can do trusts. I highly recommend trusts. Yeah. Right? That's your way to control it after the fact. But it's just a more efficient way than leaving, like people want to leave assets and businesses. And I mean,
it gets messy.
It gets messy.
No, it gets really messy. Yeah. And so this is a really efficient way to be able to have that set up.
Absolutely.
And so like turnaround time, you guys specialize in this. How long does it take? Like, okay, sign me up. I'm ready to go. How do people contact you, and how long does that process take generally?
The longest part of our process is upfront. We are very, very focused on education. This is not it's not difficult. It's just different. So we go through a lot of education. We kind of have a 3-step process that we walk people through just to make sure they understand the strategy and they get it. We go through some designs, all of that. So our process as far as education, we take a couple of weeks just to go through info, let it digest, come back and revisit. Once somebody is like, all right, I'm good, I get it, I'm ready to move forward, at that point, it takes, 4 to 6 weeks on the long side. I've seen it done in 2, but once you have it up and going and funded, right? Like, again, the front is what takes the longest getting going. Once your policy's open, once you've put cash into it, you can call and say, hey, I want to get X amount of money out. Cool. We'll have it sent, and you can usually get it within 3 to 5 days.
Wow.
Faster if you wire it, but we just like to say, generally speaking, like 3 to 5 days.
3 to 5 business days. Yeah. Okay.
So it's funded, you're set up, and then for people, they have to go through, they're funding their own bank, but they're using your service. So they go through you to say, hey, what's the term you use? Like, I need to get like $30,000. It's not a line of credit, or it's because you're your own bank, and then the terms are kind of vague on the contract or how you.
You can take it out as a withdrawal,
right?
Where you say, hey, I just want to take the cash straight out. So again, I'm just using $100,000 because it's easy to do the math. If you take out a $70,000 withdrawal, and you have 100, you take out 70, you're only earning interest on the 30 left over because it's just a straight withdrawal. On the other hand, you can say, hey, I want to take out a loan. If you take out a loan, you're going to pay interest on that 70, right? But you're still earning compounded on the 100. That's why we really focus on the loans, because it makes the most sense. You can absolutely do a withdrawal, but the terminology we use is I want to take a loan against, and that's how
you're getting the advantage.
And that's where I was thinking about. We were at a kind of like a mortgage investor conference when I met her, And so a lot of real estate investors. And so when we were talking about loans, you were saying like it's going to be a lot cheaper to get a loan this way versus going directly to the bank because the rates are just going to be insanely low.
It can be, especially like we've seen over the last few years, rates have been pretty high. I mean, we call them the silent giants. They don't move very fast. They're slow and steady. So since 2019 to now, we've seen rates within these policies adjust from maybe 4.7, 4.8, and I think the highest one that I saw over the entire time period, I don't know if they got above 6. So that's in the highest interest rate environment we've seen.
I mean, everybody wants a 4% interest rate right now. Remember when the rates were super low?
Yeah.
Everybody was refinancing.
We did
their
one
property.
today, and it was 5.5. So, I mean, it's very competitive. And the interest, I always tell people, like, do I have to pay interest? No. But again, you want to continue to earn interest. When you're paying interest on that policy loan, that's also a tax deduction when you're using it for your business or for real estate. So not only are you continuing to earn interest tax-free,
but you're able to really kind of double dip through tax strategy.
We call it tax stacking. Yeah. So you're getting tax-free growth. You're using that interest as an additional tax deduction. And the goal would be use that money to go invest in a tax beneficial asset like real estate or a business or something that's going to, create tax-free cash flow for you.
That's awesome.
So for people, like, what's a range of account size? So someone's like, I've got 50 grand, 200 grand, million. I don't know. I mean, so I deal with a lot of different financial people with this business.
It's all over. I mean, we have some people that do, 5,000 a year. We have other people that are putting 7 figures. We might have our first 8-figure case this year.
That's awesome.
Yeah.
Let's go.
It's all over.
Yeah.
I don't like this term, but they call it the rich man's Roth. So, Roth, everybody loves the Roth IRA.
Yeah.
It gets all the tax benefits, but if you earn too much, you can't put money into a Roth. Mm-hmm. And
what's the cap per year?
Like $6,750, like $6,000, right?
Stupid.
Yeah,
Like that. Okay.
Not very. But think about that. Why are they so limiting to these post-tax accounts? You can put, if you're over the age of 52 or age of over 50, you can put like 55 grand into a 401k pre-tax. But on a Roth IRA, if you make too much, you can't even contribute. And even if you can, it's only like 67, like less than 7 grand. Why is there such a difference there? Well, Uncle Sam's figured it out. They understand that for a post-tax benefit, like that benefits us way more than it benefits them, number one. So these policies are, again, like the rich man's Roth. I don't like that term, but it is, you have the same tax benefits like a Roth. All that money, you can use it tax-free, but there's no income limits and there's no contribution limits. So kind of back to your original question, the ranges are all over the place, but my recommendation is start at a level you're comfortable because you can make it bigger over time. It's not something you need to jump 2 feet in.
And this is something for people you suggest they're either lump sum or they're just continually investing in this.
Yeah, good
kind
savers.
Of a
monthly, annual. Like if you have, high interest credit card debt and can't pay your bills, this is not for you.
Get your foundation straight.
Yeah. Get structured first and your finances right. My question to you is, let's say for an older guy that's retired, got a ton of money, he doesn't know what to do with it. Would something like this definitely benefit them? Okay.
It's a huge income play.
Okay.
So it's not, like I said, these policies aren't going to get you the best rate of return in the world. That's not what they're there for. But they're going to spit out income and create that legacy piece like nothing else. Like the income on this is incredibly high. So I don't know if a lot of people know this. Like a stock account. Everybody, my rate of return on my stock account. That's great. How much income do you think you can get from a stock account if you retire at 65? Like if you have $1 million, for example, have y'all ever heard of Monte Carlo?
The country?
Yeah. So people think of the country,
Monte
right?
Carlo, like, okay.
We think about casinos. Okay. So Monte Carlo simulations, I always think about gambling and casinos because what they're doing is they're playing a game of probability. It's like counting cards and blackjack. They ran these simulations and they looked at the stock market over the last 100 years or so. And they said, okay, based off of what the market's done, depending on how much money you have, how much you take out, and how long you live, all of those things are going to determine your probability of running out of money or not. Okay? So based off of Monte Carlo, if you plan to live for 30 years in retirement, which is very reasonable, if you want to have around a 90% chance of not running out of money, meaning having $1 left, you can pull out around 3% a year.
Yeah, so you got to have a nice nut to be able to.
Yeah.
You gotta have a nice.
Think about that.
Like a big squirrel.
And that's without touching
big
principal?
stack of nuts.
No, that's principal gone. That's down to
That's
zero.
eating your principal.
The whole
That's
thing-
not just dividends and living off dividends. She's talking about taking a 3% draw
The
off the
whole
actual
thing.
full, which is going to slowly degrade your principal.
And
over
that's the
30
sad. I know
years.
people are like, oh, well, I'll move to bonds, whatever. Yeah, and that makes it worse because your bonds aren't usually yielding a whole lot. So it's 3% is kind of, it assumes a 50-50 stocks and bonds. 3% is kind of the safe, what they call the safe withdrawal rate for 30 years. So on $1 million, you're going to get $30,000 a year before taxes. That's not realistic for anyone. So back to my point with the income, and you were asking about older people.
Yeah.
These policies are a great income tool. They're not going to get the greatest rate of return, but they're going to spit out more income at a higher rate than what stocks or investments are going to do.
That's awesome. And my question to you is, how did you get started in this in this type of infinite investment strategies? How did you guys get started?
So I, if you can't tell, come from the financial world.
Yeah.
That was I cut my teeth. I
Infinite
went to
banking.
I cut my teeth in the traditional financial planning space, like a big investment firm. I told y'all I'm from Midland, Odessa. Graduated school, moved out to Fort Worth, worked at a big investment firm, right? And immediately knew everything. Like I was the smartest person ever. It was like the big tall building with the big, glass conference room that overlooked the skyline, and thought I was hot shit. And anyway, but I go work for this investment firm. I learned a lot, great people, great training. But what I started to see was there's a disconnect with teaching people how to save money and put it into an account and get a good rate of return, and actually teaching people like how to put their money to work for them. That's not talked about. We all know how to save money and get a good rate of return. Nobody actually talks about, well, what happens when I want to use it?
Yeah.
So I started to see, I was moving up through the ranks and started partnering with some senior advisors, doing some more like long-term planning. And I saw over and over and over, these senior advisors, they're just closing out accounts. People were running out of money left and right. And they just send the last check, close the account. And I'm like, this can't be what we're working towards, right? Like, anyway, so there's big, and a lot of other things kind of just started to not sit well with me. So I ended up leaving there. I got brought on by a smaller boutique firm, more comprehensive. It was independent. So it's one where they're not just one major company where you work for company ABC, you push product ABC.
Yeah.
They're independent,
They're
multiple
more
companies.
fee-based, or it was different?
Yeah, it was fee-based, but it was more like comprehensive as far as we covered full planning, not just, put all your money in this retirement account. It was long-term care, retirement income, the legacy piece. And the guy that owned this firm was the first person I had interacted with in the financial industry that had businesses and that was doing real estate deals.
Okay, so he was multifaceted. He wasn't just someone that grew up in that niche. He actually was living the walk, walking the walk, talking the talk, all that, doing.
And he was building real wealth, right? He wasn't just like, oh, put all your money in the stock market or else, right? Like, and I respected him very highly. He walked the walk, not just talked the talk. Did a couple real estate deals with him, and got introduced to infinite banking through them as actually part of a long-term income play. But when I started doing infinite banking, I was doing real estate myself, started interacting with some other real estate investors that found out about infinite banking. So I was learning about real estate while teaching them about infinite banking. Well, what started to happen was more and more and more of that was occurring. Well, David, also in this office at the time, was doing a lot of the same thing.
This is your partner in crime right now.
Yes.
Yeah, your partner in crime.
So we started off at the same firm, and we were kind of doing the same thing.
I think last time I met him, he was really tanned up, really doing a muscle bottle. Sorry if you see this.
Sometimes you got to be tan.
We'll have to put a picture of him up somewhere.
Hey, you're the Mexican. Come on, you need to be. Look, both of us, we're making you.
need to
You
step
make
it
me
up.
look bad. Okay,
Your Spaniard side is
I'm
coming
inside
out.
of an office,
You don't have to
and
be a
computer-
nerd. Get hit the tanning. We're gonna hit the tanning bed. We're gonna get, I've got girls that we work with. They do portable tanning booths. They'll come and spray you down.
It's portable. Yeah, now there's no excuse. I love it.
Come to your house. They got a zipper is sticking in a little container and they spray you down.
they're doing?
Yeah, spray you down.
Oh, that's got to be one of the most uncomfortable things. Like I think about the positions you have to be in.
I feel.
so.
I see you just going.
Exactly.
You gotta get. I don't want any.
All the nooks and crannies. Yep.
I'm 45 now.
I was
There's a
about to
lot
say,
more-
we're old
there's a lot
now.
more wrinkles and lines now. Like, hold on, let's really get at.
We got to bend
No,
over.
let's get in there. Let's get every.
I met her
groove.
partner in crime. She's Erica is like just a gem talking with her. She's so easy to talk to. But then I met him. He's like But him and I broke the
He's
ice.
intense.
Him and I broke the ice because he plays Zelda. He plays video games, and I'm a nerd. And so when we did our first Zoom conference video, I'm like, "Is that Zelda back there and the Triforce over there?" He's like, "Yeah." Okay, cool. I think we're gonna get along just fine. Dude, he was the coolest guy ever since he opened. He loves Zelda to death.
Yeah.
But yeah, really cool guy.
Yeah, he is. He's very, we're very similar in a lot of ways and very different in a lot of ways. And so that's kind of why we started partnering up, doing a lot of the same things and running alongside one another, and eventually branched off of that firm and launched our own firm now, which is Infinity Investment Strategies. And so we just focus on infinite banking, business planning, working with entrepreneurs. That was just, it really evolved from doing traditional finance to a blend of both to like, no, we're really focused and really
This is your
passionate about
niche. You
this.
know it inside out. You're giving the proper advice.
Yeah.
And for that situation, like, look, this is good for you. You know what I mean? Like, okay, that's awesome.
Yeah. I like it.
Yeah, no, I think it's awesome, man. You really bring a great energy into it. I can tell you definitely believe in what you're doing. So it's
Thanks.
it makes a big difference.
When I first met Erica, we started talking together about using YOLO Nerd, and I started working with Brian. Brian, he was the tech wizard at the time. Working with Erica and talking with her, and building her automation workflow and understanding the structure of the business. She definitely builds an awesome experience. Dude, she will educate you. She'll hold your hand and walk you through the entire process. I didn't even sign up, and I'm like, dude, I got to sign up soon. She makes it look so easy. She educates you. Dude, it's just been an amazing experience. I've been working with you for about a year and a half. About a year and a half.
Maybe over a year now.
A little over a year and a half, dude. And dude, her energy's awesome. And dude, she's so much fun to work with.
Very cool.
Yeah.
I'm sure sometimes more than others. I don't know. We've had a couple of like early meetings, and I'm like, my camera's off right now, Alex, and it's going to stay that way. Yeah, it's been good.
Yeah. So outside of this, you said your daughter's in volleyball or
Oh yeah.
competitive, traveling the country.
Yeah.
Dude, every time I call her, she's in volleyball, doing something.
Well, see, I've got a 15-year-old in soccer, and we're in that. We're high level. It's this month it's like 3 different cities.
Oh, yeah.
You're flying around everywhere. It's pretty crazy. But
Man, soccer's hard because it's outside and it's in the worst possible season. Like, I'm so lucky that we picked volleyball because no matter what, it's inside.
well, it's indoor in a court. It's
Yeah.
not beach volleyball, so you're indoor. You're just going around.
Yeah. And we went to, she goes all over like stateside. This year for club, we're actually going to Puerto Rico over spring break.
There you go.
That'll be fun, but I'm also like, spring break. That means everybody else is going to be
It's going to be, the thing is, I like to travel shoulder season. I don't know how you
Yes.
travel, and then all this stuff is during the holidays. I'm like, why?
Yeah.
Just take off school. Just take a week off school and just go do it when it's not so busy. I don't know. It's
So our club's doing Puerto Rico in the spring, and then school ball. So school's in the fall, club's in the spring. Her school got invited to go play in a Hawaii tournament.
there you go.
Hey,
So
I think last time I talked to you, was on a cruise or some sort of volleyball tournament.
Yeah.
Playing volleyball on a
On
cruise
some
ship?
beach somewhere.
we actually did. So my husband and I are big cruisers. We love, and we always cruise off season, right? We'll go in like November. We're going in January because it's super cheap.
Do y'all
right?
do co-ed volleyball? Do y'all play?
We did on the cruise ship. And I've always, if you ever go on a cruise ship, like Carnival specifically, they have what's called Ship on a Stick. And that is like their award. So if you win a contest or anything, you get a ship on a stick. And I've always told Austin, I want one of those. 'Cause I'm a little bit competitive.
Ship on a stick.
And I wanted the ship on a stick. And we went, and this is the only time we've done it. We played a co-ed volleyball game on the cruise ship and won. So I got my ship on a stick, and
ship on
it
a
is.
stick.
I have it like labeled, and it sits on my Christmas tree every year. So
There
if
you
anybody
go.
ever asks me, that's because I won the Carnival volleyball tournament in like 2023 or whatever
There
it
you
was.
go. There you
That's
go.
awesome.
Yeah.
Cool.
But other than that, no, I was basketball. I didn't do volleyball, so this is new for me.
Got it. And do you primarily only focus work with? You can work with anybody, but do you have a specific client you like to work with? I think only real estate investors. Do you want to only work with just anybody in general?
We really mesh well with entrepreneurs, and not that we can't work with everyone, but what we have found is entrepreneurs they've had the mind shift. We are trained our whole life to go to school, get good grades,
Yeah.
put your head down, go work for someone, max out your 401k, and then hope it all works out. And that's great for people that it works for. Hope is the key word, right?
Hopefully, I don't die in 30 years.
Yeah.
Hopefully.
Or hopefully I do, so I don't run out of money.
Yeah. So for people who are entrepreneurs, a lot of them have started to pull their head out of the sand and be like, you know what, maybe that's not the right route. Maybe that doesn't work for me. And they've started to have this mind shift of, I want to be in control of my own future. I want to be in control of my finances. I want to, take the path less traveled, and I'm willing to put in the work to do that. Because those entrepreneurs have kind of had that mind shift, we mesh really, really well with them because they're more willing and likely to look at creative alternative strategies to building wealth, like infinite banking. Now, that doesn't mean we have a ton of clients that are W-2 that work for corporations and they get it and they understand true wealth building and strategy. That's great. But a lot of times the entrepreneurs tend to gravitate to us because we are on that alternate route. We're not telling you to max out your 401k. We're not telling you to, stay the path.
Is this based off of your individual, or can you have the structure through a trust or LLC or S Corp, C Corp, whatever, or is this based off of you as an individual? Like
all of the above. So
you've got multiple options of ways to use this.
Anybody can own it. The corporation can own it. The trust can own it.
Ooh, I like that. Okay.
Yeah.
Okay.
That's huge.
Okay.
In fact, so if you want to really nerd out, look
For me, I don't want to own anything.
Right. And
if I really want to punch someone in the face, I'm like, come on, man. I just want to.
Yeah, I'm broke.
I got nothing to lose.
I have zero net worth. You know what I mean? I just want to punch you in the face. That happened to me. I used to own 40 rental properties and things, and I was like, man, I really want to punch this person in the face. I don't know. I mean,
but the dollar signs are rolling in.
Yeah, how much is this going to cost me on the lawsuit, civil suit? I own nothing but control everything, and that's to me.
What is the word? So we have an estate planning attorney that we work with, and he's so big. He's like, you don't want to control it. You want to have dominion over it. And so he uses those words, and we actually just did a webinar with him talking about how can we use these policies. And maybe it is he wants control but not dominion. I'm not an attorney, so I don't know. But
but there's little nuances to where you're not held liable, so you're free to live life. But you still have access and control of these assets or wealth or funds and things,
These and even if I own most of my policies are in my personal name, eventually I'll transfer them into my trust. But for now, just for ease, because I'm using it every single month, I'm putting money in and out, doing all that. It's just easier for it to be in my name.
Yeah.
Even if it's in your personal name, Texas specifically, most states other than New York and California, shocker.
Yeah.
They are 100%. The cash is 100% protected against being seized by creditors, levied by creditors, and from lawsuits.
Was this also what's the FDIC insurance, like a bank, $200,000 cap, or these? We're getting into little nuances.
Yeah.
I'm so glad you asked that. So
okay, this is just a random thing for.
No, and that's a good question. So that's one of the main questions we get is, are these FDIC insured? Absolutely not, and I don't want them FDIC insured.
Okay.
So little fun fact about this: FDIC insurance, like you said, it covers $250 per person, $500 if you're married. The FDIC has what's called the DIF. That stands for the Depository Insurance Fund. Okay, that is their reserve account. That is their bank account sitting on the sidelines so that they have money to pay their liabilities. Right? Pretty standard. What if y'all had to guess? I'm going to throw this at you. If you
probably sitting there with Freddie Mac and the other guys.
All of them, right?
Screwed. Yeah, right now.
What do y'all think the reserve ratio is? How much do you think they actually have in reserves, percentage-wise, compared to what they're liable?
I think
for?
it was 10%.
Probably lower
15,
than that.
5%.
No, this entire system is upside down, man. It's insane.
Or what is it?
Right now, of December of 2024, it was 1.28%.
Jesus.
1.28%.
So your money's gone.
Is gone. In fact,
they had the big bailout in 08, Lehman Brothers. All those guys were going. I was in New York a bunch back then, and it was just crazy.
Yeah.
It was just a big massacre, but they all got bailed out. But it wasn't through that program.
Yeah, it wasn't. No, it's not through the program because FDIC.
They had to go and dig deeper.
They don't have anything, right? They have a 1.2% ratio. So imagine, I tell people, if you bought a $500,000 house and insured it for $5,000, would the bank let you do that? No. But that's exactly what they're doing.
Me with my no loitering sign. It's a sign. It looks nice. You know what I mean? Hopefully, it deters people or makes them feel comfortable. But
it's about as productive as a wet paper sack, right? Yeah. They're gonna go right through it.
Oh man.
But FDIC, they don't have any reserves. And fun fact, March 15th of 2020, the Federal Reserve lowered bank reserve requirements to 0%. So we are in a 0% reserve requirement. I just did a video on this earlier this week, last week. We're in a 0% reserve requirement right now, and most people have no idea. So all of that to say, these policies are absolutely not FDIC insured. Instead, we only use A-rated mutually owned companies. which means there's no stakeholders. We can't go buy stock in these companies.
So you got A-rated. I mean, these are backed up. This is awesome. Like, so your wealth of knowledge. How do people get, like, tune in? You have a newsletter, or you have your own YouTube thing? I don't know.
She's got a YouTube, dude. I remember last time talking with her, she set up a camera. She's got a microphone, dude. She's got this set up, dude.
Alex gave me the hookup. He's like, okay, order this, and I did. I went through the checkbox.
So she is on the YouTubes. How can people find you on the YouTube channel?
So all of my handles across social media, YouTube, are the Erica Neal, Erica with a C.
We'll put that up.
Yeah.
What camera I'm on?
Yeah, we'll make sure to put the tags for everything.
I've got multiple videos recorded. I have been working on that. I have a couple that are up, but I haven't really been pushing them out there. So I'm getting my goal is to get to 15 videos. That way I can send them out pretty consistently. So come 2026, I'll be posting, probably weekly to start just to get that traction. But yeah, that'll be, and the whole point of this YouTube channel is it's called Real Money Talk.
Yeah.
And the whole point of this is to debunk the financial myths that are out there, because there's so much noise. There's stuff people don't know about. So let's get into the real money conversations that we need to be having.
Yeah, a lot of the conversations, not these superficial propaganda things.
Yeah.
Like the real nitty gritty,
Like
practical daily applications.
And I believe you have a course.
I do.
Yeah, she has a course, dude.
Yes.
She launched her course recently. It was one of her goals, I remember. How's that going? Is it starting? We need to post it up?
Yeah, it's going. In fact, one of my friends actually just texted me and said, "Hey, I think I just sold one of your courses for you." She's a friend and a client, and just, oh my God, she's one of the most amazing people. But she was talking to another real estate investor. This real estate investor reached out to her and says, "Hey, do you know anything about this infinite banking thing?"
Yeah.
She's like,
"Oh yeah,
absolutely, I do." She goes, "I know all about it. I do it." She was telling me, I have a policy, and I've got a great person that does it. And she told him, she's like, I know she did a course. If you want to do that, then, I can send you the link. And she sent it over to him. So, it was really kind of cool to see that happen, and I didn't even have to do anything.
There you go. That's the whole thing. Making money, doing nothing about it.
Yeah.
I wish that's how it works.
I like that.
Awesome. Anything else we can finish upon? What are you thinking?
Yeah, tons of things. I mean, you're just a wealth of knowledge, Erica, and you're super great energy. I think that's the big thing. When people find somebody they can vibe with and trust, especially with your money.
Oh my gosh.
Yeah, dude.
Well,
like I'm not dressed like today to trust me. You're not gonna trust me. With
I
your
love
money
it. I love it though.
It's been a hectic day. But
Yeah.
I definitely should have dressed up more for a finance day. I should have grabbed a suit in the back, but
Put a tie on that.
yeah, throw a tie on, 3-piece. Go pull that. Yeah, you can definitely tell. I mean, you're super passionate about what you're doing. You definitely know what you're talking about. I think it's really, even for me, this has opened up new channels, and then we're definitely going to have to connect on the back end in some other areas, because I deal with a lot of different people that structure everything from trust to estate to a lot of different lawyers and finance and things like that, and a ton of real estate people. So it's
And me too. I got to connect with Erica. I got a lot of clients that need her help.
there's a lot of people. What you're doing is going to be changing people's future.
I try to. I think my biggest thing that I try to tell people is that the financial world, again, coming from that, it was such a my daddy can beat up your daddy space. Like, oh, don't do this, don't do that. Like, they suck. It's like this tug and pull, and really kind of growing in this, what I call financial maturity. I've realized there's no such thing as a good tool or a bad tool. There are different tools for different jobs. So if you're trying to cut a piece of wood in half and you get sold a hammer, you can't get mad at the hammer and say this sucks, right? Like that wasn't sold to you. You're not using it correctly. So really, from a strategy standpoint, we need to figure out what are you trying to accomplish, and then back into what tool is best suited to accomplish that for you. And so that's kind of where we come in. We're saying, all right, you've got your banks, you've got your investments, your real estate, your stock portfolio, whatever. You've got a hammer and you've got a saw. Now you need a screwdriver. This is something completely different. It's not better than, it's just different, and it serves a completely different purpose for your money. So putting it all together is what's important.
Can you walk us through you said you have a 3-phase process, 3-step process. Can you walk us through that?
Yeah.
What is that like?
So the first step is really pulling back on the reins and getting down into basics. What is infinite banking? We talk a little bit about what it is. We talk about the policy, like what type of policy are we using? And we go into what we call the 4 pillars. So the 4 pillars of infinite banking are: how can we lower your taxes? How can we increase the control you have over your money? How can we reduce the risk exposure you have, right? Asset protection. And then how can we increase your leverage as an investor? Those are the 4 key things that when you take infinite banking, plug it into your portfolio, that's what you're going to get. So that's kind of meeting 1, very foundational, basic. Now, meeting 2, we come back and say, hey, now that you know what infinite banking is and the why, let's get into some of the how. So we get into more of the mechanics of, all right, here's what happens when you borrow against your policy. Here's how you get it deployed into real estate or buying a vehicle or investing in a business, whatever. The mechanics of borrowing against your policy, investing it, and cash flowing it back, right? So we get into more of understanding the arbitrage on that. And really at that point, if someone's like, hey, this looks good, what does it look like for me? And they want to see something more specific, then we can get into their underwriting where we're like, all right, let's get some info. We get into the specifics, make sure that they can get approved because that's still a factor. And then once we have their info, then we come back for meeting 3. And that's where we get out of the high level and we get into the nitty gritty where we're like, all right, let's look at your age, your numbers, your design. And it's kind of like getting fitted for a suit, right? You get tailor suit, make it tighter, make it looser. We make all the fine-tuned adjustments in meeting 3. And then at that point, you can decide, hey, this makes sense or it doesn't. And you just go from there.
Like, what about the situation like angel investors or people who are wanting to take their equity and really loan it out? Is this something that could also be a vehicle for that?
Oh, absolutely. It's a great way to have cash ready to go. And
so instead of you having to just take your cash and having it liable, you're borrowing against this policy, and then you have the other person isn't assigned, or I don't know, the legal contract side of it, but you, like if you actually want to be like an angel investor and lend money out just from your actual bank, you're able to really truly be the bank in that way.
Yeah, that's
but you're protected. Your assets are protected better.
You're keeping your assets inside of the policy. And so what happens is when you borrow against it, that's the technical term.
Right.
What's going on is you go to the company and say, I want to take a loan. They say, hey, Brent, we see that you've got $100,000 in here. If you want a loan for 70, we're going to leave your cash value alone. It's going to continue to earn cash and dividends and interest. We're going to give you $70,000 from our pocket. So you're borrowing the insurance company's money, and they're giving you that. They're going to put a lien against your 70, so you can't go re-borrow it, but it's still sitting there earning. So when you get that 70, it goes into your bank account, your regular bank account, and it's treated same as cash. So you can do an angel investment. When you go into a real estate deal or buy a business, you're getting full depreciation. That's huge. You want to make sure you get as much depreciation as you can. You can go to Vegas and put it on Black 22 for all we care, right?
There we go.
Yeah.
You can do whatever you want with it.
Monte Carlo.
And so there's no like no credit checks, nothing crazy, no debt to income ratio, none of that crazy stuff. Like
Nothing.
I have this much money, I can borrow against it, ready to go.
Yeah. I had a business owner, and he owns an installation company in Fort Worth.
Yeah.
And one of his trucks broke down. He's like, and y'all know, anybody that owns a business knows what a pain in the butt it is to go get a loan from a bank when you're a small business. And he called me. He's like, man, I don't have time for this. He goes, do I have money in my policy? He's like, can I get like 50 grand? Looked. I'm like, yeah. He goes, can I get it, PDQ? I'm like, yeah. So we had it to him within 2 days. He went, paid cash for the truck, got it, got back on track. He took probably 3 or 4 months, and then he was like, okay, I've caught back up. And then he started making payments like 3 or 4 months later, whenever he was ready.
And I'm sure you got a way lower interest rate. Lower interest rate. Oh,
when you're also not getting the mortgage points and the middleman. You're cutting the middleman out.
And we're not stabbing our credit and all that crap.
No credit hit. He probably got a better deal, honestly, on the truck because he paid cash.
Yeah.
And then the loan on the policy was, I think, like 5.6 versus like a 9% or whatever the bank was going to charge if you do the loan, a business loan through the bank or whatever it was at that time. But yeah, it was much better. So he loved it.
Yeah, so you have access to your equity. You have access to your cash. How do you, you've already explained it multiple times, but this is an investment strategy, but it's also a way where people can save in a safe way. Still have access, but with protection.
Yeah.
So instead of you saying, hey, I've saved all this money in my name, and then I go punch someone in the face, and then they sue me. This lawyer, I
a lot of pent-up aggression in here.
I'm friends with a lot of personal injury lawyers. I always think of things as like a personal injury lawyer. All right, well, my buddy.
You really want to punch somebody right now?
Hey, you know what? Anybody that has had tenants, I'll back you up. Anybody that has had tenants wants to punch them in the face.
Yeah. Hey, look.
No doubt.
Yeah, I had 40 of them, more than that. So
tenants and toilets.
There's a lot of stuff. And so I always think that the personal injury lawyer, okay, is he even going to take this case or not? But if you have nothing like a big bullseye, you don't have a big bullseye on your back.
No.
But you still can use your money. You can still go make money with your money. So to me, this is amazing, because you're not like, oh yeah, I've got money, I'm saving money. No. And then any of the assets you have, you can structure those types of things, but you can borrow it. You can basically be operating in a debt with minimal tax impact.
Yeah.
But you're still actually having wealth that you're accumulating for your family long term. So it's to me, it's pretty interesting flipping it, but then you don't have that stress of that bullseye on your back. I don't know.
There's asset protection's probably, we've talked about it for years, but that's been one of the hot topics that's come up over the last few years.
But is this a sort of how you discuss it? I mean, this is truly a bit of asset protection.
It's a huge asset protection. We've got trusts, we've got LLCs, we've got all these firewalls. These are just
things
one
people
more
know about. They kind of hear these things.
Okay.
Yeah, you can't be right. It like if you get sued, it's protected. Even creditors come breathing down your neck. You have an accounting mistake and the IRS is breathing down your neck and they're levying like your bank account. These dollars are protected against that. So even O.J. Simpson, and I need to pull up like all the details on this, but he was given some pretty good advice before all the lawsuits started coming down the pipeline to put as much cash as he could into a life insurance policy, and that's exactly what he did.
Wow. Is that what paid for his...
Well, he also was getting, even his retirement from the NFL, they weren't able to touch. So he was getting his payments from the NFL plus his life insurance policy.
Dude, I didn't know that.
Yep.
I didn't
Look
know that.
up
Yeah, not
Bowley
term, but you
Coley.
get your whole life and you put your stuff in there and it's protected, man. I mean,
You know
you're
who
able
else did it? T-Pain. So he didn't go to jail, but he was talking about this. It was on TikTok. One of my friends sent it to me.
Like T-Pain the rapper.
T-Pain the rapper.
T-Pain
He's
the
like,
rapper.
man, he's like, I freaking love life insurance. I need to find it. I'll send it to you. But
She started just spinning the...
I love it. It's one of those things where people who don't want that target on their back, it's a great way to create additional firewalls against that. Bowley Coley, if you get a chance, look it up. It stands for bank-owned life insurance and corporate-owned life insurance. So the largest banks and the largest corporations in the world hold a majority of their cash inside of these policies.
Well, same as cruise ships, too.
Yeah. Well, they're doing it like in the Bahamas.
Yeah, but they do it at Cayman or the Bahamas, different areas, but they have their own, they insure themselves.
All right.
But it's a similar type of
It's
thing.
a shell.
It's a way to protect your assets, but you hold it and you're protecting yourself.
Okay, but I'm gonna bring up the question. What if some guy went to Vegas, found a chick, married the wrong chick?
Oh,
is it
yeah,
gonna
divorce.
now?
Yeah, let's
it-
get
I'm gonna get into that a little bit.
So I've
Especially
actually
in
asked
today's
this question.
world.
It's going to depend on your state, whether you're a community property state or not. That's going to be number one.
Okay.
It's also going to depend on did you have the policy prior to the marriage or not?
Okay.
Right. So again, I am not an attorney. Let's make that very clear.
Yeah. Okay.
This isn't legal advice or
This
financial
is not.
advice.
Yeah. Can we have like
Neither
a
one.
disclaimer across
Disclaimer.
the bottom? Yeah.
Okay.
But these can they be divided up as assets in a divorce? Yes,
Okay.
they can. So like, I'm married, and so if he decided to be a knucklehead and I had to, and he wanted to leave and take half, yes,
He could take half. He could
take
spend
half.
it all. My half is gonna compound.
So depending on the
interest.
state,
I'm
I think
good
this
to
is
go.
a community
Yeah,
property.
it is. Yeah, Texas is community property.
Okay.
And I only have one policy that I got pre-marriage, so we could obviously factor that in. But again, we've been together for 10 years now, so
Got
it's.
Well, you
gonna
never
be
know what's gonna
joint
happen on a cruise.
There's a whole documentary about that, so you never.
Man overboard.
He plans on my cruises though, so I can't like abandon him. I gotta keep him around.
No.
But yeah, it's going to depend on your state and a lot of other factors. So
Oh man. Oh wow.
Austin, I love you. Please don't watch.
I brought it up. It was.
Oh man, I'm gonna have the FBI on my door.
Oh man. Okay. What do you got?
I love it.
Anything else?
If you got to think, I mean, I've got some final questions and things for that, but this has been a great conversation and very enlightening. I've really enjoyed this.
Good. I'm glad. I can't think of anything else.
If you can give a tip, we like to give a tip. He calls it just a tip.
Of course you do.
But if we could give a tip, what would you give a tip to anybody that's interested in infinite banking strategies?
So most people that I talk to, one of the number one things they tell me is, I wish I would have met you 5 years ago,
Wow.
10 years ago. I mean, I hear that weekly, and I love it. It's very sweet. It also makes me a little bit sad because I wish I would have met them before too. But it's that old Chinese proverb. If you wish that you would have done this 5 or 10 years ago, don't think in 10 years you wish you would have done it 10 years ago, right? Like the best time to plant a tree was 20 years ago. The next best time is today. There's plenty of options. Even if you feel like I'm too old or I'm uninsurable or I'm unhealthy, guess what? There's ways around it. You can get policies that aren't even on you. You can buy it. Yeah, you can buy a policy on somebody else.
I didn't know that.
Well, the whole government does it on all of us with our social security number.
Yep.
We are all, they have policies.
Well,
Your
pay into
social
it.
security number, everybody has a social security number. Everyone, they have a policy on every single one of us.
That's what companies used to do when we had pensions. So if we all worked for a company, and we had pensions, right? They would pay through the pension, but when I died, my death benefit would go back into the company pension and replenish the funds. And that's how they were able to keep that money consistently flowing. I mean, it's been around longer than the IRS. It's been around longer than any other financial instrument, right? So it's nothing new. It's nothing fancy. It's just old wealth strategies, time tested.
You're leveraging the interest. You're leveraging compound interest with tax strategies, asset protection, and still being able to access your money in a way.
Exactly.
Dude, do you know about the story about the Rockefellers and the Vandergrills?
Yeah.
The Vandergrills? Dude, I came across this story off a YouTube video one night, and it was the coolest thing. And this was years ago, but I didn't really understand it until I met Erica. She makes it so easy to understand. Dude, it's awesome. And if you ever get a chance,
something you can't talk about on a podcast.
It's in that book I mentioned. What would the Rockefellers do?
Yeah, what would the Rockefellers do?
So it compares the Rockefellers to the Vanderbilt family.
The Vanderbilt 3 generations that screwed the pot.
It was
screwed the
gone.
pooch. Yeah, screwed the pooch.
Yeah. But
Rockefellers are still rocking and rolling. They're still running the world.
Exactly. And it was because of the way
Medical
that
system,
they
everything.
transferred the wealth, right? And so Rockefellers they used what's called cash flow banking, same thing, infinite banking. They use life insurance policies, but they also established like family structure. And I think that's so undervalued. Like I said, prepare your family for
Arranged
wealth.
marriages.
Yeah. Oh, I'm sure. Right.
Yeah, I have a lot of clients here with arranged marriages. And I always, I ask them all
Really?
the time. Oh yeah, a ton. Around here, we have a large Indian population, so I always ask them. I'm like, "But did you have right of refusal?" You know, it's like arranged marriage, but with right of refusal.
Yeah.
And I'm like, "Okay, so this is the modern take on it." You know, I'm like, "But could you say no?" And they're like, "Yeah, I could have said no." I'm like, "Okay, at least you had the choice."
But he drove,
just made it a
he
little
drove a
bit easier.
Tesla. He drove a Mercedes. I think we were good.
No, but but I think it's a way better way of doing things. No, but structuring things. So I'm sorry, I'm taking you way off subject. So Vanderbilt's didn't structure it properly.
No.
Super wealthy, insane amount of wealth at the time.
Yeah.
They ran out of money
then-
quick, man.
They were
Third
just
generation.
inefficient and they did not prepare correctly. They were just giving wealth away. It was getting taxed between each generation. And I mean, if you wouldn't walk up to your kids and give them a sack of cash today
Or gold or something.
or gold, why would you do it when you die? Why would you just be like, "Oh yeah, here's a buttload"? That's not generational wealth. That's a recipe for disaster. So let's set it up in a way that you can structure it. You know, for my kids, they know if you want to start a business or you want to buy a house, like you have to bring it to the family bank. You have to say, "Hey, this is what I want to do. I want to start a business." You have to show it. You have to show your business plan. You have to tell us why. And then this isn't where I'm just giving my kids money. They're paying the family bank back. Like when my daughter goes to college, she's not getting a free ride. I want my kids to have skin in the game. But instead of having student loans, she's paying her loans back to the family bank. So she's going to have a lot more benefits to that, but still establish the structure and the responsibility mindset she needs to have that this education is for her and she needs to respect that.
I wish my spouse knew about infinite banking strategy, and I'm not my spouse, but just my wife's parents. You know, he literally cashed out a lot of money to pay for her college, and he's out. Like he's out. Obviously, she doesn't have student loans, but he didn't want his daughter to take money out for student loans.
Yeah.
But I wish he would understand and knew about infinite banking strategy.
Yeah. There's so many people I hear, they're like, "Oh, I paid cash for this. I paid cash." And it, honest to God, makes me sick to my stomach.
Yeah.
And I think the older generation too, they got eaten, chewed up, spit out by credit cards, right? Like those got introduced and people got overwhelmed with debt. So they got very debt averse. They got very scared of it. Now, if we use, I don't like debt, if we leverage it responsibly, because I just tell like, okay, if you take $100,000 and you pay cash, you paid 0% interest, right? You paid 0 interest. Everyone's like, "Oh yeah, that's great." But what did you give up? You gave up the ability to earn interest on that $100,000 every single year for the rest of your life. How much interest did you give up? Versus if you can keep your $100,000, continue to earn interest on it, can you earn more interest than what you're going to pay on that loan? That is smart strategy. That's wealth building. That's leverage. That's not debt. Those are two different things.
So let's say I got a $100,000 policy. Can I go back to my policy and say, "Hey, can I get this to a $500,000 policy?" Can you do something like that? How does that work?
Well, so are you talking about like death benefit or like how much cash you're putting in?
How much cash you put it in?
Yeah, so that's a really good question. Normally, we focus on starting at a level that you're comfortable with, whatever
Right.
it might be. Most people do that for the first 3 or 4 years. They're getting
Okay.
their feet wet. They're getting started. Now, that's most people. I have a handful of clients that started the policy. because they weren't really certain. They're like, I'm just going to do a little bit. And within 2 years, one guy had 3 policies.
Wow.
Yeah, because he tried one and he was like, okay. He's like, I want to get another one. So he got one on his wife. And then literally the next year, he got another one on him. So in 2 years, he had 3 different policies.
Wow.
That's possible. Most people don't do that. They start at a level like, hey, this is my savings. This is where I'm good right now. This is my liquidity. And then 3 or 4 years goes by. Business has grown. Maybe you have some deals close out. You refi. Something happens where you have like, some cash coming down the pipeline. And you're like, all right, you're going to have a minimum and a maximum in your policy, right? Like your maximum, how much can you put in? Depends on what your minimum is. Mm-hmm. And so if you're comfortable in the beginning with your minimum at this level, your maximum is going to be here. Later on, if you want your maximum to be higher, you can increase your minimum. And it's just a savings, right? Just like you would be doing into a regular savings account, bank account. You're going to be saving into it on a regular basis. Do you have to save into it forever? No, but you're going to want to, because if you're putting in $1 and you're getting out $1.10 and then $1.20 and then $1.50 and then $2, right? Because that compound interest curve is ticking up. Yeah, I want to put the dollar in, right? I'm not mad
You're
about
able
it.
to fight inflation in a way with this, but still have access to it.
Exactly.
Yeah, I'm happy about the tax benefits. That's where it's at.
Oh, that's huge. You're right, man. Like, I used to say this when I was a traditional financial advisor, and I look back, I'm like, what an idiot. Why did I say this? You're maxing out your 401k or your IRA or whatever. Like, oh, well, tax brackets are going to be less when you retire because you're going to be making less money. Think about the logistics of that. If you're making less money in 20 or 30 years, something went seriously wrong, right? Like that's the most ridiculous thing. We're not going to be making less money in the future, and tax brackets are not going down. Let's be real. So we're setting ourselves up when I'm not saying tax deferral is bad. Nothing's good or bad, but having all of your money be deferred to be taxed later is a trap. So having the ability to save money on a post-tax basis, meaning you can get all that money out tax-free later, right? You can continue to use it through the loans tax-free. Do that for later where you can get tax-free income. Lower your tax liability today, not with, tax deferrals, but buy tax efficient assets, buy real estate, buy a business, right? Look at different strategies. Oil and gas has crazy depreciation benefits. So you can
right now it's going to be huge profit with all the AI, like all these power. So I used to work with nuclear power plants in the Navy. So right now with all of these data centers, they're going to refire up 3 Mile Island. They're going to be fracking. They're going to be cranking coal. I mean, oil, everything.
Oh yeah.
So the whole Green Deal is gone, guys. Listen. It's all about all ahead, freaking cavitate.
And it's not even
We're going to be
fuel.
Burning everything.
It's plastics, it's pharmaceuticals, it's a lot of the natural gas right now is helium is through the roof because of MRIs. MRI machines use helium to keep the machine cool. Like, it's not just fuel, and if you drive a Tesla or whatever, like, nobody cares.
Yeah.
The point is, you're right, it's not going anywhere. And the government's going to tell you where they want you to put your money by showing you the tax code.
Yeah, it's incentivized.
It's incentivized.
The tax code is more about all the loopholes than it is the actual taxes.
It's a tax code. We have to crack it, right? We just have to go in there, read it, figure it out. And so there's plenty of tax benefits to lower your tax liability today. I get that. Lower your tax liability today while putting yourself in a tax-free position later. Let's balance the two out. So you're right. There's a lot of tax benefits on that.
Wow. Cool.
Awesome.
I'm awesome. All right. I'm good. No, I mean, Erica.
Check.
Erica, thank you so much for coming to the Founders
Absolutely.
Podcast. You got
Thanks,
anything
y'all.
else?
It's
Dude,
great,
I told Erica's awesome.
Wealth of knowledge. Yeah, you are awesome. That was really.
I'm
going to
have to fit my head through this door when I leave. Y'all are like talking me up. I'm like, oh my gosh.
Awesome.
Y'all are sweet.
You good?
Yeah, that's
good.
good.
I'm
So then,
rocking.
I'll get you got Amanda doing some things, and I'll get Lane to do some clips too and put some stuff together.
I'll get it for you.
Sweet.
Thank
Cool.
you so much.
This is good stuff.
Erica.
Good questions, guys.
We made you do a lot of the talking.
Yeah, I
wanted
hope
you
I didn't
to.
talk too much.
No,
I was like,
that was the goal.
No, but the thing is, if we're also coming from different perspectives, and to have the questions I have and the questions he's have, and these are the same questions people come in your office probably have.
absolutely.
I don't know. It's a bunch of people. This is the kind of stuff you need to be sharing, just cutting these things up, sharing out there, because they're going to see like, oh, wait a minute. Oh, okay, that's for me. I mean, that's
like the asset protection and the tax, like that's all going to hit different people. Depending on
it's
where
different
they
pain
are.
points where they're at in their that's where they're at in their in their little journey of this money game of bullshit.
And eventually, I want to get people from 2 different industries because everybody knows our industry. But can you imagine somebody from her world and somebody else from a different world?
Yeah, we could mix it up in here, you know.
too.
Yeah, I mean, I don't know. Like right now, I've got it set where we can do like four people
in
in
good,
here. I mean, we could move this and just squeeze in 6 people, but then I don't know. Like to really have a conversation, it starts to get a bit.
Yeah.
I don't know. I feel like when you get 4 or 5, 6 people, it starts to get kind of hard to have a conversation.
I think 4 is enough, right? Just
4 is good.
Yeah.
4, 2, 3. That range. I know it works out well. Cool. So parenting and volleyball. I don't know. I'm going to ask some personal questions. We've got most of our stuff here. I'm still rolling. If you don't want, I can cut it if you want.
Keep going?
I'm an open book.
Okay, let's go.
So as a parent, you said your daughter's 15.
My oldest is 16. My youngest is 11.
11 and 16. So. Yeah, I have a 15 and a 4 and 5 year olds, and then 4 just turned 6. So it's a challenge. It is a freaking challenge.
Dude, you have no idea.
So outside of just all this finance stuff, and you've got 2 girls. Mm-hmm. What is I don't know, like you seem like a successful. You're driven, you're competitive, you're putting it out there, you're living a traditional life also, you've got kids life and
your
everything
mom,
else.
your wife.
No, like so many people know. Well, no, so like I'm curious. So like at a big area, you talked about divorce protection, which is that's a big thing for men.
Yeah.
Even for women, if you got money, you got to be careful. But when it comes down to parenting, you got daughters, you're trying to raise them. A lot of people they're so focused on career and things like that. They don't realize that you guys have a time clock. I don't know. I mean, I don't know. That's a real thing. Men, we're a little different, but it's for women. There really is this time clock. How do you feel about your daughters? How are you preparing them for life right now? I know there's a lot of craziness with AI and this and that, but in general, with social media, with them being competitive in sports, you're driven. I imagine your daughters probably some of them. The apple didn't fall too far from the tree. How are you preparing them, and I mean for life and men, and just basically just go after the 1%er guys? I mean, I don't know,
So that's
because you're taller too, you know what I mean? Shoot, if she's playing volleyball, she's got to be taller. So I mean, she's really got to be a top 1%er. You know
she's
what I mean?
really not. Bless her heart. Like I'm 5'9". Her dad is 6'2", and like I said, she's a junior, and she's at 5'7".
She's
5'7". Okay,
Yeah,
so
she's
for volleyball,
she's average.
Yeah, 5'7's a little bit above average, but for volleyball, that's short.
That
For
is short
volleyball, that's tough.
She moved from front row. This is her first year to play back row. So she switched to defense when she was like, okay, I'm not going to be 6 foot tall like everybody said. So she's playing defense. But I think that was good for her to kind of like be able to pivot and say, this is what I was planning on. This is what I was thinking about. Now it's time to pivot and change. And that is a hard transition to go from front row jumping, spiking, blocking to go into defense and having to read what that person's doing. Mm-hmm. I mean, that's one of the hardest transitions you can do. So for her to go through that and muscle through it, go back to being bad at something, right? To go from, hey, I'm good at this, I'm used to it, I'm in my comfort zone, and to go into a whole new phase of like, I'm going to start back at ground level and have to work for that. I was so incredibly proud of her for that. So kind of to your point, I try to encourage her, like, it's okay to be bad at something, right? Just keep going. Keep
Is
trying.
there a lot of pressure back in high school these days? Like, just a lot of pressure?
It's so volleyball.
Is it like the show Mean Girls?
I don't know. I don't know. Maybe, I don't know if she's obviously had issues with kids and things that, different. But, like, for the most part, her volleyball girls have been really, really supportive.
Pretty supportive, strong
They've
group.
been a great group. Now, she had another group, oddly enough, so she did band for a while.
So those damn flute players.
Yeah. Flutes are the word. My mom plays flute. I love you, Mom.
That time in band.
Man, those flautists are something else. But like, she had more problem with the band kids than she has with, I know. And I'm like,
so I couldn't find anybody. When I was doing little Alex's stuff, he couldn't do football. He got beat up by the kids.
oh.
Dude, some parents are like, knock him down. This is flag football, dude. This is first time. And dude, they're just knocking him over.
No, Texas is pretty insane.
Dude, it's pretty intense,
It is.
man. And we did soccer. He didn't like that. And the first time we did karate, but I called it ninja school. That's kind of the only way. That's the only way.
You gotta know your audience, right? Like,
I sold it. He was a little hesitant. He finally found it, and almost had like a dad moment. It's like, he found something he likes. You know what I mean?
Yeah.
Well, bowling, they came, my son had turned 6 last week or 2 weeks ago, and then y'all came out, and he was bowling. They were having fun. They were all interacting. They were doing they had fun.
Just, something they can figure out. How can you put in effort? How can you struggle? How can you figure out, like, trying over and over and over again, and then eventually reach a level of success that you get validation or you get, like, that reward for your efforts? I mean, why not? And I think sports are great. I think that's a huge part. I require my kids to play an instrument.
Really?
So, absolutely.
I got a piano like 2 years ago and he hasn't played it yet.
I require
You have to take his hands and push them on there.
I want my kids. I don't play piano. I wish my kids would. And my oldest was like, no. I'm like, if you can play piano, you can play anything. Yeah. Like that is the golden instrument. And anyway, she plays French horn. My little one's going into middle school next year. And I told her, I said, get ready. They only have band here. They don't have, I did orchestra. So I was an orc dork. That's not an option here. So she'll have to pick something, in the band. And my husband played.
Wait, everybody played in the family. Did anybody sing? Did you guys sing? Did anybody sing?
My grandma sings. So she, West Texas, outside of Amarillo, there's a town called Borger, and that's where she's from. And it was like this small itty bitty church, and they sang hymns a cappella.
Oh, really?
And I'm like, to me, this is what heaven sounds like. And I remember being a kid, and it's a bunch of old people in the church singing out of the hymn, but they would harmonize. Like it was the most, I swear it sounded like angels singing. And I'll never forget that. But that's what heaven sounds like to me. So I did not sing, but my grandma sang. And it's one of my favorite memories ever is that old church. But my husband, I give him a hard time. He and his family are like hardcore sports. Like he did football and baseball. His sister holds like every freaking volleyball record in her high school.
Oh, so volleyball runs in your family.
Oh, yeah.
Okay.
Yeah. But he did play the clarinet for 1 year, like the worst instrument you could pick. If you play clarinet, I'm sorry, but it's a very honk, 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 honk kind of instrument. But in his mind, he liked to be able to take it apart and put it back together. So that's all he cared about. And then after that, he never touched an instrument. So yeah, I find that. And if you ever get to meet
do a
him,
woodwind, do saxophone, or I don't know.
Yeah, do a brass.
The cowbell.
Yeah, ding, ding, ding. The cymbals just.
Oh my god!
You'd be like lunch is ready.
Random cymbals.
Ding, 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 ding.
Lunch is ready. Cool, man. This was fun.
Oh, this is fun.
Okay, cool.
All right, Eric. Hey, thanks so much for coming out today.
Yeah.
Thank y'all for having me.
And sharing
This
a
was
wealth of
great.
knowledge. Yeah, that was awesome.
I appreciate it.
I didn't know much about a lot of the stuff about infinite banking until actually our meeting.
Yeah,
Dude,
it's just
I need to go
different.
take your class.
So your class, how do people access your? It's an online workshop or it's a class or how is it?
Yeah, it's a course, and there's 3 modules to it, and it just goes into more detail, kind of like what we talked about.
Is it?
today.
It's on your website or is
It's
it
not
like
on the
a-
website,
Dude,
yet.
I don't.
How do you have your?
I know.
How do you have your course? How do people access it? Or-
Right now, it's just through ads, but I'm actually going to email the lady that does our website.
What's the platform or where do you host the?
Go High Level? It's through YOLO Nerd.
Okay, so it's actual. So the modules inside.
Yeah, it's all through YOLO. Alex helped me set the whole thing up. Like,
Dude, I set up. She used the OBS Studio.
Okay.
Remoted in.
Oh, yeah.
Set up all OBS. She bought a Steam Deck.
Yeah.
Stream Deck.
Yeah, I've got Stream Decks back there
Yeah, you know what I'm
sometimes.
talking about.
Yeah.
And so, intro, camera 1, camera 2, outro, just like that. Boom.
Cool.
Yeah, it was cool.
yeah, I've got it right there, so I can just. Yeah, it's pretty sweet.
It's legit.
I am technologically challenged. That is not my
It
area
makes
of
it
expertise.
easier with the button. I use it for some of our workflow
Yeah.
with
Yeah.
photography stuff sometimes, and then
You use that stuff? You use it?
the Stream Deck. Yeah, and then OBS. I'm doing some live shopping stuff. So I've got a.
Okay.
I've got a show. I'm going to do. Show me yours, and I'll show you mine. But it's for like e-commerce.
Yeah.
So for like trending products on TikTok and Amazon. So then
love
I'll
it.
have different beauty influencers and influencers. Like I was shooting an influencer earlier today. Yeah.
Is
but
that
we'll
like your
just-
thumbnail? Like, show me yours, I'll show you mine.
Yeah, that'll be just have fun with it. You know
Yeah,
what
I
mean?
love it. That's the hook, man. That's it.
Like just be like, come on, let's sell stuff, but let's have fun.
I was talking to Amanda. Amanda's like, we should. We're coming up with some really good names of the podcast. She's like, how about 2 mics and no, 2 men and mic, 2 men and 1 mic.
2 men, 1 mic.
I'm like, okay, Amanda, that's.
But the problem is, like, if you say that, you have to like fulfill
Two-
it,
two,
where
one,
you're like
two
both
men.
just sitting there sharing a mic.
get over here. Oh man.
Oh my gosh, yeah, that would be comical. I would watch that.
Well, you had the guy in between the ferns or whatever.
Oh my gosh, Zach Galifianakis. That's one of the funniest. Like, I've only seen little reels. I've never watched
Yeah,
the
I've
whole
seen some
episode.
shorts from it, but yeah. So I was contemplating putting some plants back here. I'm like, why do people all have plants in these freaking podcasts?
I called them the ferns right here.
Yeah, so I was like, why do people do that? And I was looking it up, and I don't know, the AI thing told me that it creates comfort and trust. And I was like, all right, whatever. I'll buy some plants and throw them back there. But
I'm a plant nerd. I've got plants all over
yeah,
my
but
house.
these are plastic. They're not even real. I don't know. I need to get
It's
some real. I need to get some real plants. I don't know.
Well, then you have to keep them alive.
I gotta have a green thumb. And
Yeah, I'm not that.
Yeah, me neither.
Yeah, my outside plants do great, but my inside plants, they're on rotation.
The only flowers I see is the flowers I get for my wife on Valentine's Day. That's it.
Yeah.
And they die like 3 days later.
So my husband knows I don't really like flowers because they die.
They die.
And in my mind, I'm like, that's a waste of money. I also don't like chocolate. So fun fact about me, it's gross. I do not like chocolate.
Sweet tooth.
So my husband knows, like,
Heavy
for
pastries.
I wish I didn't like chocolate.
Oh, I love pastries. I'm all carbs. Sweets, I don't really care for. So he knows if he, anniversary, birthday, things like that, instead of giving me like flowers and chocolate, he gets me beef jerky and Red Bull.
There you go.
I don't know what that says about me as a wife, but
No sugar Red Bull or full
I do
sugar?
no sugar.
Yeah.
I don't know.
Zero carb Red Bulls.
It makes zero sense. I like there's another one called Aspire that Sam sells, and it's all green tea. It's like a better quote unquote energy drink, and they friggin' stopped selling it in stores.
That's no
Oh
good.
my gosh, yeah. So
They
anyway,
didn't sell enough.
Oh, I bet they still sell a ton. Yeah,
Yeah, it might
may have been a
still be
supplier
online,
issue,
but-
or
Yeah.
yeah, I need to go find it online. But it was all like green tea, and it was just non-chemical. It was just herbal energy, which I could
well, it's
probably.
got a little the green tea. That's where that theanine comes from. So it's a little less jittery. Kind of gives you more of that.
Yeah, and it was only 80 milligrams of caffeine instead of like 160.
Yeah,
So-
I'm like a gram a day. I just go full.
Yeah,
throttle.
just
You're like
just
Ivy. Let's
hook
go.
it right up.
Just-
Yep.
I'll drink like 2-3 pots of coffee.
There was
Oh, yeah.
there was a
Same.
coffee shop I went to, and then we got some tea, and I looked up there like, what's that called? He pulls it off the screen. He's like, it's called gunpowder.
Damn.
I'll take some of that.
And I'll run home. Thank you.
Awesome,
I love
man.
it.
Yeah.
It was
I'm
a good run.
Good run.
This is great. This is a really good
Thanks
studio.
for coming. This is awesome. And more to come, by all means.
Yeah. So anybody out there, if you want to stay tuned, we're basically just going to be talking to founders of companies, people that are mover and shakers in different industries. And Erica, Infinity Investment Banks Strategies, Infinity Investment Strategies with Infinite. But the term for the banking is infinite banking.
Yep.
So that's
Infinite
like
banking
that's what
concept.
people are looking on Google. They're looking up infinite banking.
Yeah, they'll look up infinite banking or infinite banking concept, which is where we get IBC. Infinitebanking.org. You can look up authorized, and I do want to emphasize that for a second. I didn't mention this earlier. Authorized infinite banking practitioners, that's key. If you're working with somebody, there's a couple things you need to look for. One, are they an authorized practitioner and they have their license for that? Just because this is a course, a certification you can get, and it just helps make sure that they have the understanding, the knowledge, and they have a regulatory authority making sure that they're setting the policies up correctly, number one. Number two, are they independent or are they just tied to one company?
Which you don't want.
No,
You want to be
mean,
able to shop around. You want to be able to
Yeah.
have
That's why I
options to an
wanted-
extent.
Yeah,
I mean,
it's like dealing with the broker. Go
exactly.
Find me the bigger, better deal.
So that's kind of, we're independent brokers, right? So we have multiple A-rated companies we partner with, and depending on who we're working with or what we're trying to do. Now we have our favorites, but we have the ability to look around. And then number three, whoever you're working with, before you go with them, ask them how they're using their policy,
Ooh.
right?
Okay.
Like, would you use a personal trainer that wasn't fit? If they're not using the policy, if they're not doing it, if they're show me mine or show me yours, I'll show you mine, right?
So I'll
Same
tell
thing.
I'll tell you a real funny story with that. I was in New York City in a boardroom meeting with these Italian designers. I don't want to say the name. I was there with these Italian designers. There's the lady from Milan, hardcore. I'm the only one there that even speaks English. And I was a male model before, so before I was doing this photography, that's how I picked up photography.
Really?
Oh.
So this is for
Had to
underwear.
bring it up, didn't it?
So listen, I'm in this meeting.
I'm a male model.
And she starts,
By the way.
she starts going off on everybody, and I can't really understand what's going on, and I start to kind of pick up a few of the words, but basically, she asked everyone like, what kind of, because it was an underwear meeting. I'm standing there in the underwear, that's it, and then they're all there in their suits and stuff, and then she starts asking everybody, what kind of underwear are you wearing? What kind of underwear are you wearing? What kind of? No one in there except for me and her were wearing the underwear from the brand.
Oh, really?
And she lost her shit, man. I'm talking about like hardcore mafia Italian, cussing them all out. You know what I mean? It was insane. But yeah, so people need to use what they're preaching or what they're doing.
Yeah.
Yeah, but that was a moment where
That's a really good example.
Oh yeah. I
Can
mean,
you do
she
other states, though?
lost it.
Yeah, I can do. We can do any state. We're currently in like 47 of the 50 states. We actually got our first client in Hawaii.
Hey, there you go.
Yeah, so that was
So
fun.
it's sort of regulated by state, kind of.
It's regulated by state. We
Okay.
can work across the whole U.S.
But Puerto Rico or
Puerto Rico, we can
U.S.
do.
Virgin Islands.
Virgin Islands, I don't think we can. We can do Puerto Rico. We cannot do Canada, but I have a couple connections in Canada.
To be able to tie together.
Yeah. Now, if you can, there are differences between countries. So if you are an American citizen and you can get it here, I would recommend that.
Ooh.
It's much more tax favorable. Canada's not so tax favorable, as you can imagine.
Don't move to Canada right now.
And Dubai for people who want to give up their citizenship and things like that.
Oh, yeah.
Or that's a whole nother level.
Well, that's actually a good point. Whenever you start your policy, it's a unilateral contract, which means once you set it up, there's only one person that can change it, and that's you. So once you start your policy, if you move or the laws change in the future, it cannot be retroactively adjusted. So, for example, if somebody starts their policy in Texas and then moves to New York, all of the asset protection, everything that the state of Texas actually imposes on these types of policies carries through to their policy, even though they moved to New York, because it was started in Texas.
So it's kind of an umbrella that sort of travels around. That's interesting.
Yeah.
The only thing you can move your policy if you want to move it to a trust.
Yeah, you can change ownership. Like I can own the policy.
It's transferable. You can transfer.
The only thing you can't change is the insured. So you have the owner and the payer, and then you have the insured person, and then you have the beneficiary. You can change everything except for the insured. That's the only thing the insurance company cares about, because they're going to look at your physical body. That's what they're insuring. The rest of it, they don't really care.
Got it.
There's regulations.
You're
right?
the
Like,
asset
Yeah, exactly.
and the liability.
So if, let's just say something happens to me, God forbid, and I want to transfer it over to a beneficiary, can they continue paying onto the policy?
No, once the
You're
insured's
gone,
gone,
dude.
you're gone.
Yeah, you're gone, man.
What typically happens, and I had a lady talk about this today.
Soul world.
Peace out. But she was talking about, well, when I die, I want to use she's putting it inside of a trust.
Yeah.
And so when she dies, she's writing it into the trust documents that her death benefit will buy paid up policies for her grandkids. So like you talked about earlier, how your death benefit replenishes the pension. So same thing within a trust. When I die, it replenishes the trust, but some of the money is allocated to grandkids. So grandkids that are, as long as they're 6 days or older, they can have a policy that's paid up. It's just a lump sum policy. It's a paid up policy. And then now they have that policy that's going to replenish the trust in another 100 years when they pass away.
Oh, that's
so you
awesome.
have like this just recycling waterfall of money recycling through the policy.
And it doesn't have to go through probate.
It doesn't have to go through probate. Yeah. That's the generational wealth that we're talking about, is not just me to my kids, but me to my grandkids, and then my kids to their grandkids. 2 generations. I don't want to think about my kids. Obviously, I'm going to think about that, but I want to think 2 generations ahead, and my kids need to do the same. So just between me and my kids, we're planning 6 generations out, 4 generations out. Yeah.
Yeah, but you're already thinking, you're already ahead of the curve. Yeah.
Yeah.
Awesome.
Yeah.
You ready to think?
Another good
You ready to think 6 generations out?
I just take it one day at a time. Right now.
I know. I'm like, every week I feel like I just say, if I can just get through this week, and then I say the same thing the next week. So yeah, at this point, I'm just going to keep
I used to have a mentor tell me, how do you eat an elephant?
one bite at a time.
He would say that like
Yep.
50 times a day. I'd be like, all right, dude, I got it, man. One bite at a time.
One bite at a time. That's all you can do.
know.
Oh, big elephant.
How do you eat an
Big
elephant?
bites at a time.
Yeah.
Yeah, big ass bites.
Big bites. Oh my gosh. That's all you can do though.
Okay.
Well, let's
Alex,
wrap
do you
it.
have 1 kid or 2? Because I know you've
I got 2 kids.
Okay, I was like, I know.
I got
Princess.
a 2-year-old and I got a 6-year-old. My 2-year-old gave me my facial clippers.
Oh.
She gave it to me. She's like, oh, thanks, Dad. I'm like, I had a really bad dream about you cutting your hair.
Oh no.
And so my wife, she starts cutting her hair. She's like, Alex, her hair keeps falling out. And she ended up
Underneath?
No, underneath it.
Like underneath.
I was like, damn. It wasn't too bad, but you notice it if you really look at it.
Yep.
Last week was pretty rough. Talking about getting through your week. Little Alex riding down a bike. I pulled my back. Told you about that.
Oh no.
And then this is while I'm teaching him how to ride a bike. Went inside the house. He rode his bike. Biffed it right into the curb. Lost 3 teeth.
Oh my god. That's bad.
All of them were baby teeth.
Baby teeth.
Okay,
we
that's
lucked
yeah.
out. We lucked out.
They don't really count.
We lucked out. We lucked out. Oh man.
That's
surprisingly
bad.
it was difficult to get a dentist the next day.
Yeah. It was difficult?
It was actually difficult.
They're on, I don't know what.
They were booked up.
Man, that's because they're on every street corner. I feel like that.
There's a
nail
ton,
salons.
but but they're all pretty
Dude,
booked.
dentists are like the mafia, dude. They want
are.
this insurance and this much. Oh, dude, it's a nightmare. But we did find a pediatric dentist in the area up in South Lake, and they got us in.
Oh, that's good. Oh,
And he's like, yeah, he's good. He's right. He's
poor
pretty
baby.
cool.
My oldest, so she was a flower girl in our wedding, and not even 6 weeks before our wedding, and I have a picture of it on my phone. She comes out of the bathroom, and let me see, she was 8. I think she was 8. Anyway, she comes out of the bathroom, and she cut her hair right here on her forehead. And it's not like on the side. It was like right here. Like she had
You're going to notice it.
freaking unicorn right here. And it was like that tall. And she has really long hair. It was sticking straight off of her head. I'm like, why did you do that? And she said it got caught something, or I don't know, whatever nonsense story she made up. But I have a picture of it. And so like the day of our wedding, we got like concrete gel and just matted it down the best we could. But yeah, sure enough, 6 weeks before the wedding, just right on the top of her face. At least when she's 2, I'm like, Oh, and my sister, I'm going to tell this, and I don't even care. My sister, one of my favorite, I give my middle sister the hardest time.
If you want us to post it, we'll post it.
Oh, and
Sorry.
I'll tag her in it. So when I remember this, we were hanging out, and it was just us at home. And my dad had same thing, like a beard trimmer or whatever.
Yeah.
I don't know what she was doing or what she was thinking, but she tested it on her eyebrows.
Ooh.
So I hear the bzzz and then the scream. She shaved off only half the eyebrow. So she shaved off half
But
of
was
her
it like
eyebrow.
this side or like this side?
It was the outside
just-
side or the front. I don't remember. I
The
really
missing
can't.
half of an eyebrow.
But
And
she came out
takes
holding
a long time for your eyebrows to grow.
does. And she came out holding the clippers like teary. I'm like, oh my God. And I just busted out laughing. I was like, you are so dumb. And my mom ended up having to, because you couldn't just leave half of it. You had to shave the whole thing. So my mom had to like shave the rest. And then the rest of the year, my mom was like drawing on her eyebrows. She was in, I don't know, 6th or 7th grade. She was not young. Young, but not like a toddler.
You're not going to hide that.
No. So, Cassie, I remember when you shaved your eyebrow off, and now everybody else knows too.
There you go.
Got to give her a hard time.
On camera.
That's awesome. Erica, hey, thanks so much for coming and hanging out with us, sharing your story.
Thank y'all for having me. This was fun. Good time.
Thanks for coming, dude.
Yeah.
Awesome.
It worked out really great.
Yeah. You feel like a superstar now?
I do. This is
You are a superstar.
You are.
amazing.
Awesome.